In our last video, we saw how HyperLiquid essentially built an incredible product, used growth engines such as a points program and a referral program to grow TVL, to grow perps volume, and to essentially reach 70% of all on-chain perps volume. And then they launched their token with a massive airdrop and an up-only chart. Now, this begs the question, how do you maintain momentum and keep growing after that? So in this video, we're going to go deep into how HyperLiquid is building an empire and an ecosystem. So post-TGE, one of the big reasons HyperLiquid's token price has just done so well is they basically figured out a way to keep users loyal and keep them around. This is where they introduced the HyperLiquid Assistance Fund. 97% of all trading fees from perps are used to buy back hype. In just months after this, hundreds of millions of dollars worth of hype was bought back, creating real buy pressure. This gave traders and holders a lot of confidence. And most importantly, it was engineering value back to the community and token holders. So the big takeaway from this first piece is that incentives don't end after launch. You need to really think about your post-TGE strategy to ensure that there's reasons for people to hold your token and continue to interact in your ecosystem. Now let's talk about how HyperLiquid transitioned from being just a perps protocol into building a chain and ecosystem. In early 2025, HyperLiquid launched HyperEVM, an EVM layer on top of its core chain. So suddenly this wasn't just a perps DEX, this was a whole ecosystem. For example, you would have DEXs, you would have lending protocols like Flux, stablecoins like USD Athena integrations, even NFTs, and lots of yield farms. So at this point, HyperLiquid positioned itself more as a platform and a chain/ecosystem, which led to valuation comparisons with Solana and Ethereum. As I mentioned before, HyperLiquid did flip Ethereum in weekly fees at a certain point. So it led to this much higher valuation premium in people's minds. And that's why HyperLiquid's right now trading around a $40 billion FDV right now, and with room to grow, according to many hype holders. Founder Jeff kept repeating one thing over and over, which is the future of finance is going to be built on HyperLiquid. He wants to bring everything finance onto HyperLiquid, and he doesn't think that his team of around 10 to 11 people can do it, right? He thinks that it has to be done by a community of people, which is the vision behind HyperEVM. And for new builders, this is a great opportunity. If you have great technical skills, HyperLiquid's a perfect place because there's tons of liquidity and attention in the ecosystem. So you just get a ton of support from their community by deploying on there if you show that you truly care and will reward their community. So the big takeaway here is once HyperLiquid had the liquidity, it had the distribution, it had the loyal community, it could basically become bigger than one product. However, they realized that building more products is simply something they didn't have capacity for, which is why they're leveraging the distribution they have, the liquidity and the tech they have to allow other DeFi protocols to build. So this is something, once you have a successful product, it's worth looking at, is leveraging that distribution and that community to essentially turn your product into a platform. Keep in mind though, this is very different than how most people in crypto do it. Most people in crypto try to build an ecosystem, but they don't really have a product, so there's no reason for anybody to build on it. Meanwhile, successful ecosystems usually start with products first, and then they essentially allow other builders to tap into that audience and distribution as well as technology. However, if it's just tech is commoditized. I mean, HyperLiquid was built on Tendermint consensus, I believe. There's no value that flows back to Atom from that. Again, I could be wrong. I don't know the exact technicals here, but just keep in mind that distribution, in my opinion, is far more important than tech, especially in crypto, right? Obviously the tech matters, but it's commoditized at this point. Now, at this point, HyperLiquid introduced a really interesting concept, which is builder codes. So builder codes is basically a referral-style revenue sharing mechanism that other teams can use to earn a lot of extra fees. Basically what it does is it allows developers to append a unique fee split identifier to any trade they generate, right? So in more tangible terms, right? Like let's say you build a front end for HyperLiquid. For example, Phantom allows you to trade perps inside their wallet powered by HyperLiquid. And what that does is Phantom now earns a percentage of perp trading fees as well as spot fees. So with the revenue share, builders will earn 0.1% of perp trading fees as well as 1% of spot fees. So this incentivizes ecosystem contributors to direct users and liquidity towards HyperLiquid. The Phantom integration is a great example. With Phantom, I believe over $3 billion of volume has been driven through their integration with HyperLiquid, and they've earned a lot of fees on that $3 billion. Now, at this point, you have this ecosystem with different apps deploying. If you look at this AXN dashboard, you can see there's a ton of cool things that are going on in the HyperLiquid ecosystem. For example, Kinetic is a pretty popular liquid staking platform. Felix is basically like a money market on HyperLiquid. So there's a ton of cool things going on. So what people started realizing is a lot of these projects are pre-token, and they essentially also realized that, hey, HyperLiquid probably will do a season 2 airdrop at some point. So it's driving kind of this double dipping effect where people are deploying tons of capital because they know hype's going to go up probably, right? Like it's one of the best outperformers in this market. And they also know these ecosystem projects are probably going to launch tokens. So everybody's just deploying to HyperLiquid. These projects are getting a ton of liquidity and TVL quickly. And then also people are able to farm these projects as well. So this kind of airdrop farming loop is really, really working well with them. And this is almost like double dipping, right? You're positioning yourself for the next hype airdrop, if that does happen, which I think it will, as well as farming airdrops from native apps. So what is the result of this? At this point, TVL has just kept growing up and up. You can see right here that TVL this year has just gone from a couple $100 million to over $2.2 billion, which is pretty mind-blowing, right? So one takeaway here is if you are building any sort of ecosystem, you really want to think about how you can create this sort of effect of people coming in and trying to double dip, people positioning for your next airdrop and your protocols, basically ecosystems airdrop. An example of this is Abstract, right? Like they have done really good jobs in terms of how they position their protocol and how they have these systems where you have Blast Gold or Abstract XP that you earn for interacting with ecosystem dApps. So that's definitely one way to just essentially incentivize people to use your ecosystem. Now, one thing you did see is by early 2025, HyperLiquid caught the attention of TradFi. VanEck did a report on them. Bloomberg called it a major player in the on-chain perps and crypto derivatives world. Athena integrated with HyperLiquid, which also was a pretty big deal for HyperLiquid. So at this point, it kind of became a bigger story than DeFi. There's also this HyperLiquid treasury company as well. So you also have that. So you just want to keep in mind that external validation from TradFi helps. Once you get to a massive amount of traction, you want to start thinking about how you can position yourself more as an institutional play, or try to find ways for institutions to have exposure to whatever you're building, right? So you want to make sure you partner up with custody protocols or custody teams that can help institutions kind of use your chain or ecosystem. And there's a lot of different things you can do there. But the main thing is once you do have a successful product that on-chain users love, TradFi is actually a market right now. So don't forget that at a certain point, you're going to have to expand into that. So at this point, HyperLiquid's basically breaking all records, 320 billion in trading volumes monthly, open interest over 15 billion. I think at this point, it's at 70 to 75% of perps shares on chain and routinely doing 10% of Binance futures volume. So that's like the next big play is can they steal away a ton of Binance's volume? There's a reason HyperLiquid isn't listed on Binance, by the way. So how did HyperLiquid build an empire? So first of all, the assistance fund created a ton of buying pressure and also built this narrative that HyperLiquid really cares about their token holders and will continuously drive value to token holders. So both narrative, community, as well as buying pressure wise, that's been a huge success. They expanded from a single application into a full ecosystem with incentives and ways for builders to monetize and created a whole ecosystem of people who are building on HyperLiquid, thus giving their users way more opportunity to interact and use their capital in different ways. You also have airdrop speculation driving a lot of activity. And then you also have institutional adoption, treasury company adoption, lots of different things going on beyond just DeFi and actually involving TradFi. So the lesson here that I want to leave you with is once you have attention, don't just guard it, expand the pie, right? Like try to figure out what are the next steps to grow this even bigger and perhaps bring in more builders to scale what you have already. Obviously, this is at a point where you're already a huge success, right? Don't try to build an ecosystem when you have something that's barely working. But if you look at the most successful companies in the world, they started out as a product and then expanded into an ecosystem. So to give you a great example in the video game industry, Valve built video games first and then built Steam as a way to essentially distribute their own video games. And then that created a platform effect. So you build your own product, get it to be successful, figure out distribution for it. And if you have massive distribution, other builders are willing to build with you. I hope you enjoyed this video. This was a 3-part series on HyperLiquid. Feel free to watch the previous 2 videos. I'll make sure to have links to them. And if you like this video series, this was brought to you by Crescendo, which is my go-to-market agency. We've worked with a lot of top teams such as Aether, Sky Mavis, Mavari, many others, and we help them with 0 to Z go-to-market. So feel free to hit me up on Twitter or LinkedIn if you want a free consultation. And thanks for watching the video.